the performance of different Asian markets such as Japan, Hong Kong, China, and Australia, and how they reacted to the news of the debt ceiling negotiations. Asian markets rallied on Thursday, following Wall Street's lead, as investors were hopeful that the U.S. would reach a deal to raise the debt ceiling and avoid a default. The debt ceiling is the legal limit on how much the U.S. government can borrow to pay its bills. If it is not raised by June 1st, the Treasury could run out of money and default on its obligations, which could have severe consequences for the global economy. The optimism was fueled by comments from President Joe Biden and top congressional Republican Kevin McCarthy, who both expressed their determination to negotiate directly and reach an agreement soon. McCarthy said that a deal was possible by the end of the week, while Biden shortened his trip to Asia to focus on the talks. Asian stocks showed strength as uncertainty over the U.S. debt ceiling improved their appeal. Chinese equities accelerated after the release of better-than-anticipated trade balance data, which showed a surplus of $42.85 billion in April, beating expectations of $28.1 billion. The offshore yuan weakened slightly against the dollar, as some analysts speculated that China might intervene to prevent excessive appreciation of its currency. Japan's Nikkei continued to outperform the region, surging to a fresh 20-month peak of 30,667.13, before closing 1.2% higher at 30,450. The index was boosted by strong earnings reports from companies like Sony and Toyota, as well as hopes for more fiscal stimulus from Prime Minister Fumio Kishida's new cabinet. Japan also reported a trade surplus of 974 billion yen, $8.8 billion, in April, up from 663 billion yen a year ago. Hong Kong's Hang Seng gained 0.93%, recovering from a late sell-off on Wednesday. The index was supported by gains in tech stocks like Tencent and Alibaba, which shrugged off regulatory concerns and benefited from the positive sentiment in the U.S. market. Hong Kong also reported a trade surplus of 25.4 billion Hong Kong dollars, $3.3 billion, in April, up from 18.6 billion Hong Kong dollars a year ago. Australia's stock benchmark gained 0.59%, despite an unexpected fall in employment in April. The economy lost 46,200 jobs last month, compared to expectations of a 20,000 increase. The unemployment rate remained steady at 3.5%, as more people left the labor force. The Australian dollar fell against the greenback, as the weak jobs data reduced the pressure on the Reserve Bank for further tightening. Overall, Asian markets followed Wall Street's lead and rose on hopes of a debt ceiling deal in the EU, which would ease one of the major risks facing the global economy. However, some analysts warned that there could still be some volatility ahead, as the negotiations could face some hurdles and deadlines.